All right, as Nigeria's economy evolves, private equity is playing an increasingly important role in driving growth. Today, we explore the state of private equity in Nigeria and what to expect for 2026, from deal flows and investor appetite to the sectors attracting the most interest. And ask whether private equity is becoming the main source of capital for businesses in the country. Joining me for this conversation, we have Madam Tokunbo Ishmael. She's the MD, Alethea Capital. Thank you so much for joining us this morning. Great to have you.
Good morning. Thank you for having me.
Fantastic. So let's look at the top destinations now for private equity, on the continent. Word on the street is Nigeria is still that top destination. Is that still the case at this point?
Absolutely. For depth and breadth, Nigeria remains the anchor market in West Africa, mainly because it has the largest pool of scaled private companies, the most developed services, the ecosystem banks, advisors, lawyers, and the biggest domestic demand base. However, that being said, even though it's a top destination, what we're seeing in 2026 is that there's competition from smaller West African markets that can offer currency stability and sometimes a clearer exit visibility. So Nigeria is still number one, but the opportunity set with other peers is expanding, and we need to keep going and look at the selectivity of the businesses that we invest in 2026.
Right, and talking about currency stability, we did see, Ghana, they did have, some fantastic macro stories in 2025. That they have the best performing currency, that's the CD for 2025. So what do you think can, keep Nigeria ahead of its neighbors at this point? And it wasn't bad for the Naira, in 2025. We had stability. Is that enough to keep Nigeria ahead of its neighbors when it comes to PE?
Well, stability is a great thing because in the past we've had some major shifts that have affected a lot of investments. So stability is good. And what you see with investors now, as we are selective, we're looking at companies that can provide some of that FX resilience, quick cash conversion, and good governance. So, and we're seeing that, especially as we look at companies that provide export opportunities and import substitution. So on a macro level, we're seeing good numbers. You just spoke about great growth. The CBN has made some great strides with some pronouncements. And even earlier this year, the FT said a number of African countries, or Africa as a continent, will outstrip growth in Asian countries. And Nigeria is a big part of that, as we've just mentioned.
All right, are there specific, sectors still driving appeal for Nigeria at this point? Is it just, fintech as usual?
Well, financial services is a big part of what's driving deal flow. But that being said, so you've got the fintech, you've got the technology, tech enabling across the real economy. So, for example, at Alethea Capital, we're one of the early investors in Paga, which has shown stability over the years as a financial infrastructure play, and is providing financial rails not just to retail customers, but now to other companies, so enabling them to receive payments, manage their cash flows, inventories, etc. We're also seeing embedded finance. We've invested in embedded finance in companies like Max. We're also seeing Omni Retail, which is providing SME enablement for retailers and connecting private equity to the real economy. So the real economy has a lot of juice in it, and what it needs is that enablement. It needs those financial rails. And we have companies like Tomato Juice, who are also in the Alethea Capital portfolio, who are really connecting the farmers to export opportunities, and we're looking at agribusiness as well and manufacturing as a key part of that.
So how has the private equity landscape, changed recently? Are we seeing, bigger deals or smaller deals, or just a shift in the types of companies investors are interested in now?
Yes, so like I said, there's more selectivity. But what you're also seeing is a kind of barbell opportunity set where you're seeing smaller deals getting more attractive. Most of those smaller deals are within the tech enabling space or the real economy, where you're seeing some formalization and growth. We still need to eat, so agribusiness, like I mentioned before. But what you're also seeing is that the larger companies are seeing more attraction from capital. And so we still have that thin bar in the middle for the missing middle. So you've got large companies attracting capital, but you're seeing a lot more interest in these smaller, nimble, innovative companies across the sectors that I've mentioned.
Right, and definitely, I'm sure there are businesses out there looking for investment right now, and they believe they have that product or service that can make life better for Africans and Nigerians. As an investor, at this point, what are you looking for in that kind of business in 2026?
So again, we're looking for SME platforms that enable SMEs to grow, have better resilience. We're looking at agribusiness and manufacturing. We're looking at those companies that have export opportunities that can take their footprint and take advantage of the Africa Free Trade Continental Agreement, but also provide that foreign currency resilience, as I mentioned earlier. And we're looking for companies that are looking for more than just money, right? We're looking for companies that want that patient capital, that will stick with them, will partner with them. And unlike the short tenors that you're seeing coming out of banks, we're partnering with companies to grow them. We just heard the Minister of Industry talk about opportunities for export now new into the Middle East, and we're partnering with companies that are making us proud with Nigerian products that are being exported, not just apparel and creative, but also food and consumer goods. And that's happening already across West Africa and beyond. And now it's great that we have these kind of agreements and policies that enable these companies that can grow. So it's important that we have companies that have an opportunity set, that have a latent market demand that they can tap into, that have the resilience and the governance to boot, and willingness to partner for long term.
Right, and we also like to track, what's happening when it comes to, local investors and, foreign investors at this point. When it comes to, local versus foreign PE funds, who's taking the lead right now?
So we're still seeing foreign capital come in overwhelmingly. But what we're seeing is that is obviously going to the larger end of the scale when I mentioned the barbell, the larger companies. But we're also interestingly seeing more activity domestically as growth opportunities arise and people look for new investment opportunities. We're seeing domestic capital come to the table. It's still overwhelmingly small compared to what we have across the whole set. So in Africa, there are about $3 billion of deals over the last 6 years. About 70% of that was Nigerian companies. And I can tell you that overwhelmingly more than 70% of that capital came from foreign investors. So we still need to see more activity from the domestic investors, the pension funds, the other asset allocators, the development institutions that we've seen grown over the years in Nigeria. And that's happening. We just need to see more of that at pace.
All right, so yeah, the foreign PE still leading at this point, but what's motivating their activity? Is it opportunity, risk appetite, or something else?
Well, it's not altruistic, so let's start from that point, right? They do see the opportunity. Like I mentioned, even the Financial Times is talking about how growth is going to outstrip. in Africa, Asian economies, how growth in Africa is going to outstrip Asian economies. So people see that opportunity. People see we have the population dividend, the youth dividend, which provides a latent demand. That consumer story is still strong. People still need to eat. People still want to feed, clothe themselves. So that is still happening. We have a lot of that. And but what will not be missed is the fact that there are development finance institutions that are overwhelmingly providing capital, and they do have an agenda around impact-driven opportunities, where you're not just making financial returns, but you're creating jobs. So you're making it possible for ordinary folk to have access to essential services like finance, education, health, key areas of the economy. You're addressing food insecurity. So these are real opportune sectors that are attracting foreign investors for the financial returns, for sure, and for the ability to make a change. And we all know the Sustainable Development Goals, that's a key area. Another key factor is the energy transition, because we know globally all the talk around net zero agendas, and Africa is seen as a place where, given our breadth, our population size, our economies, there's significant opportunity to drive energy transition. And for us in Africa, that is not just about net zero, it's about improving lives and livelihoods. Without some of our companies, our manufacturing companies, Sultry is a cassava processing company in Iseyin. It's a real economy company that's right there with the farmers, turning that into cassava derivatives like sorbitol, cassava flour, and exporting. We were able to cut costs in Sultry by over 50% by driving on energy transition. We need to see that happen in more companies across the real economy. Digitization, this is one of the last frontier markets. We need the digital infrastructure. So there are opportunities to invest to drive on that, which is then going to drive the opportunities for the innovative tech companies. And when I spoke about the youth dividend, that's where we're seeing more activity from the youth. So it is opportunity-led, it is demand-driven, and it is about how can we achieve improved lives and livelihoods for ordinary folk in Africa.
All right, so, definitely when it comes to borrowing costs, that is, stayed elevated in most parts at this point. Even right here in Nigeria, we had just one, rate cut in 2025. We're seeing forecasts for maybe a 400 basis points cut, maybe in 2026 at this point. Do you think, businesses can, somehow, maybe there's some potential there, they could rely on the banks for borrowing, in 2026?
Well, there's some businesses that can, maybe again, I mentioned the barbell, those companies, the larger companies, maybe that have significant collateral to put down towards their loan requirements. They're those companies that are looking for short-term working capital, and banks will continue to be the largest provider of working capital for those types of companies. At the other end of the scale, there's still a paucity of funds that are flowing to small and growing businesses, which are challenged to secure funding from banks. And also many of those companies, those innovative companies, are really looking for patient capital. I spoke about our fintech investments in financial infrastructure through Paga. That was patient capital. Omni Retail is providing working capital almost as a substitute to banks to many SMEs and retailers, real economy businesses. So we're looking at different solutions that are coming in to substitute where companies, growing businesses, growth companies require more patient capital, and where they certainly don't have the type of collateral that banks are requiring.
All right, I guess at this point we'll keep tracking to see how private equity continues to fund most of these businesses, in 2026 and beyond. Thank you so much, Madam Tokunbo Ishmael. She's the MD, Alethea Capital. Thank you so much for helping us paint the picture of what to expect this year.
Thank you.
All right, I'll take a break now. When we come back, we're still looking at investment flows at this point. Where investors going to make money in 2026? That's in a moment. Just stay with us.